Hi, I'm Patrick Reed from the Adamas Principle. Not a day goes by before something else happens, and it's all involving the yield curve. We had a J. Powell at the Wall Street Journal Job Summit, and just to let you know, it was a late addition to the calendar. We were all wanting something, certainly the bond market was looking for some pushback on the yield narrative spiking higher. They didn't get it. Stocks, absolute sick. Yields on a scream, absolute ripping higher, dragging up dollar yen. And for that matter, a lot of the yen crosses, participating, certainly CAD yen anyway. Dollar screamed higher, followed the yield, right? And if you look at the Swiss, that's being hammered too. So Euro Swiss and dollar Swiss, not far behind dollar yen, right? So this is all normal. If you are a Fed watcher, if you are a J. Powell watcher, he's stuck to the script, right? Pragmatic, or is he stupid? Is he a fool not to recognise what the market's telling him? If you look at the short end, there's a whole 25 basis point hike priced in at the beginning of next year. That's interesting, right? Very, very interesting stuff. But so far, J. Powell, and don't forget, we've got jobs tomorrow, jobs today, but so far J. Powell is sticking to the script. Let's look at the first chart, dollar yen. This is, without doubt, an absolute screamer. Smashed right through 107.07, did the same to 108.13. The next decent level here is 109.84 and some change. Let's call it 110, the big figure. Let's just see what happens, but to be honest, I'm looking at all the assets and they all point to reflation with some, right? Absolute with some. If you compare the prices on the 10-year at 0.9 in January and the prices now at near to 1.6, you'd be very brave to be shorting this. And let's just be clear, both the yen and the Swiss franc got hammered. So all those crosses lifted. What does this mean? Why are they doing this? It's because of the global yield expectation higher, much, much higher. So there you go, there's your dollar yen. If we do stay above this 108.13, we could get more legs up to this 109.84 and then above that, the 110, the big figure. Next chart, please. Okay, right. Euro dollar, often slow, often overlapping, but make no mistake, we really got much lower after J. Powell's speech yesterday, and we cracked through this 119.78. We really do have not much to go on apart from 118.90, and then there's this 117.81, which is the sort of 76 area Fibonacci. But really, again, you've got to be, this is a runaway train on the dollar higher. We do have this non-farm, but to be honest, it's playing second fiddle after the Powell speech and after these yields. They are relentless. Pre-pandemic levels on the yields, and the 2s, 10s absolute steep like a rock face. So you really have to be a seller in this euro dollar market. Where would you expect more sellers to turn up? Well, you might have a sniff at 119.78. Above that, 120.65. Next chart, please. Even cable, our old friend cable, took its time. It's got a bit of a catch up to do. There is a small level at 137.02. Let's just see what happens. But I would just say, look at euro sterling as well, making new highs. If cable rolls over, euro sterling will go much higher. And that's pretty much it. A little bit of a catch up for cable. And then your final chart, dollar rand. This says it all. Quite a good representation of emerging markets. There's a bit of a worry here in emerging markets on this 10-year yield in the US. Not happy at all. If you're looking at emerging markets, look at the dollar. That's it from me. My name's Patrick Reed from the Adamas Principle. Have a great weekend.